Welcome to Weekly Open. I'm Brian. Everybody's here today. Don and Cred. Thanks for being here for Weekly Open. As a reminder, you're probably watching this on YouTube, but if you're not, you might be on audio as well. You can do audio or YouTube. Go to weeklyopen.com and see the different ways to subscribe. Go like us on YouTube, all that good stuff. I don't normally say that. I don't know why I am right now, but I don't have anything else to say. So let's start with you, Don. Don, how you doing?
Good. Enjoying life as a Litecoin enjoyer. But no, I'm doing all right.
Fred, how's it going, man?
I mean, it's going. It's been at least a bit quieter on the headlines front. Hopefully, I haven't cursed that completely. So a bit of time to just catch up with charts, come up with new watch lists, and do a bit of housekeeping, so to speak. But yeah, not too terrible given what's transpired in the last couple of weeks.
Yeah.
How are you doing?
I'm doing okay. I'm mostly over my flu now, so I feel a little better. I don't sound very good, but I feel a little better. And yeah, I mean, like you say, I hope that what's out there now is nothing burger. But it's now grayscale's on the chopping block in terms of what people are talking about is at risk. Not great. they're not a good one to be at risk. But we'll have to just see what comes of that. There was more than one report. Paul Graham took a lot of crap for one of these tweets. Chris Bernisk also hinted at something on the horizon, and they were both like, something bad's probably going to happen really soon. Can't tell you about it, but watch out. And so now everybody's just kind of on edge. There was a reporting of whatever it was, $1 billion hole for Genesis, which puts inherent risk on Digital Currency Group. This is all Barry Silbert's companies. So now we're all just sitting here wondering, like, what are we waiting on here? Like, is this the next shoe to drop? What impact should that have on the market? Is Barry insolvent, etc. And in terms of like what that's doing to prices, I would say overall not a lot. Just there's just kind of this steady drag continuously on Bitcoin and ETH, and I guess more so on the majority of other alts. Don will talk later about the exceptions to that. But yeah, so like basically everybody's wondering, is Barry about to go down with the ship? We don't know. Am I missing anything there?
I think
no.
Mainly it, yeah.
Yeah, that's the main speculation, right? And sort of the DCG Digital Currency Group empire has a ton of stuff under it. CoinDesk, Genesis Lending, and then also just the GBTC closed-ended fund as well. And so that's like a huge sort of piece of infrastructure in the crypto space. And last week, Genesis actually just froze their new loan originations and withdrawals, and they're now trying to raise money to the tune of $1 billion to kind of shore that up. And we haven't heard much in terms of the success of that. There's been a ton of speculation that no one's biting. And also additional speculation that DCG owes like 1.1 to Genesis via this kind of promissory note, so like a debt instrument. And that's sort of the hole they're trying to plug. But also the issue is like the sort of Genesis lending products. They're the biggest sort of lending firm in the space, certainly up there. But also a bunch of like CeFi types of quote unquote safe yield products like Gemini Earn were sort of getting their yield from Genesis. So that's been adversely affected. And so the main speculation is, if investors don't want to shore up and plug the hole, how do you plug the hole? And the sort of one way of doing that would be to basically some version of a GBTC sell-off. That's at least the speculation. I've considered some legal arguments against it, so it's a bit messy in terms of the structure, given we're talking about regulated products. But in any case, the inability for DCG to raise that money and plug that hole and kind of restart Genesis and so on and so forth, if we go down the insolvency route, or even like plugging that hole from their own infrastructure such as GBTC, none of that is particularly favorable. So I think that's kind of what's been still acting as a drag, what's being referred to, and what's been holding the market down at least. So it'd be nice to get some clarity about that this week.
Yeah, I think the hard part about it is what are we pricing in versus what are we just nervous about in terms of the market. But it's hard for me to imagine the worst case scenarios priced in. Um, people always are looking for an excuse to nuke in the depths of a bear market. So you probably get some adverse price action if kind of the worst came to be, which would be what, like, okay, we're redeeming GBTC and selling it before we allow you to redeem it, or I don't know if there's anything other than GBTC or ETH that if it went out of business completely has a severe impact on the market.
I mean, that'd be enough, right? Like,
yeah, of course, but I'm saying like that's
Yes.
that's the worst case scenario. I don't know
Yes.
if everything else is basically a good case scenario. Like, oh, Barry sold CoinDesk or shut down Genesis. Like, I don't think the market will really care very much about those, unless
I mean, Genesis, I think, would be a big deal personally. That's a really big one, and
it is
so much
it is
of
a big
the
deal. The
lending in the
question,
space is on the back of that.
but it depends on what are the next level impacts of that. That might have an adverse effect, right? Like,
Yeah.
somebody is still owed $100 million, because Genesis was uh, lending their funds out, borrowing from them, whatever. And now what with those funds? Like, how does that impact them? Does somebody else go under because of Genesis doing that?
Yeah, or do they have to sell other liquid stuff to make up the hole from being frozen on Genesis? Essentially,
which is happening everywhere, right?
Yeah, yeah,
And
exactly.
maybe Don, to your point about like which altcoins are doing things, the ones where there's basically no chance that somebody's holding that as collateral.
Yep.
Maybe that's why they're performing. I don't know.
I mean, that's what kind of was my reasoning. Like I think it was a couple months ago when we talked about altcoins, and I was like, I mean, I like to buy stuff that no fund owns. After the free AC collapse. Turns out that's been pretty good overall. Like everything that's been owned by FTX or by free AC or by anyone really has just been kind of nuking. Whereas like the stuff that is not has been doing quite well on the altcoin front.
I pulled up CoinDesk, which may or may not be owned by Barry in the future. A couple of things that came out since we talked last, or even over the weekend. One is the FTX largest creditor list. So the top 50 creditors, the largest is 226 million. The smallest out of that batch is, I don't know, 20 or 30 million. But the largest ones make up $3.1 billion, which also equates to the amount that Sam took off the table for himself. That's got a sting for all of them. Let's see. The FTX Exploiter was another one. So they had all the funds, and there's speculation that this is the Bahamian government. Don't really know. So they had it all in ETH. Now they sold it and put it into either Bitcoin or REN level Bitcoin. There was some speculation that they were just basically swing trading it to create a lot of slippage and then like max positioning themselves on perp markets to actually make money, because since the coins are going to be traced forever, like, so just do things that impact the price and go short those things or long those things on a perp exchange. If that's actually the case, how could this possibly be the government of the Bahamas doing it? Because this seems too ridiculous.
Yeah, it's not, right. I think Taylor Vano, probably butchered her name there, who's like one of the big MetaMask people.
Taylor Moynihan, who is at MetaMask.
Yes, apologies. Yes, so she's been very good. She's the OG on-chain sleuth, so to speak. And her argument is that this is like an actual hacker type of bad faith, whatever, rogue actor, as opposed to the Bahamas government using all this DeFi infrastructure. And Zach, XBT, came to a similar conclusion based on-chain history and the sort of patterns of behavior as to what they're doing with the money and how, where it's being deposited, like some dodgy Russian exchanges and so on and so forth. So yeah, that seems just. I mean, I think Taylor even made an argument that this has sort of North Korean fingerprints all over it potentially. So it's certainly far detached. It could be a nation state, but not the one, not the one that's sort of the one that's being considered. So yeah, I think look, there's been just a lot of sort of misinformation, understandably, because people are very. We're all hung up on the news and everyone wants to break the most recent thing. And there's a bunch of like also nefarious engagement farming based around what's been going on, even if it's, arrived to on false premises. So yeah, it's a lot of the time it's a bit less sensationalist than it seems. I mean, new allegations of fraud and stuff are coming up, but for this specific hacker, that does just seem like a sort of rogue black hat more so than, Bahamas going through DAI and Laszlo Bit and wrapping BTC and transferring it here and there, trading perps. That, I don't know, that's like from an Occam's razor, whatever point of view, seems to me far less likely.
Yeah, I forget now even where the Bahamas thing was. That Sam that said that, or
I think he liked a tweet that might have implied it. I don't know. I've lost track, to be completely honest with you, with that specific person. I think there's some decent evidence to suggest that he like straight up just took money out of FTX, and that's in the affidavit and other stuff. But this specific FTX exploiter, one of those flows of funds at the very least appears to be a black hat more than anything else. And also that's been having a real market impact.
Yeah.
Like when that account's been like selling down ETH. That we saw a lot of pressure come into the market, and people were kind of tracking that and not fading it. So that's something, that's a bit of sort of a chunk of supply that's non-trivial and probably worth at least keeping an eye on.
Gotcha.
Mm-hmm. Yeah, it's been leading to selling on ETH. Basically, the ETH BTC ratio has been just and doesn't actually look that good. It's been a little bit bouncing today, but didn't really look that good compared to a lot of other things, in my opinion. Which is going to be interesting. But I think BTC is at a more interesting point in general right now, given all of this. We kind of ended up at the complacency high of the last bull market, like just basically exactly where we are right now, where we're trading. And to me, it kind of feels like either we're holding this or we're going to like 11, 12K ish. That's the next support that I've got. Which I think, I don't know, makes it interesting enough to kind of look for at least a little bit of a bounce. But then again, the whole news side of things has just been so brutal. Like we just get bad news after bad news. Every day something new comes up, and every day the news that we've had just get a little bit worse. Oftentimes it's like you get news and then it's like it's overblown. In this case, it's just been worse and worse every time we get more info. It's just complete pandemonium, and we kind of like fell for the biggest scammers in this space, which is just, I don't know, it's wild. But I think TA wise, at least, you make an argument for a little bit of like a breathing, like a 2 or 3 of breathing room, or a bounce at least, given that support. But I don't know how you guys are looking at the charts. Just for me, it doesn't look too terrible. It doesn't look good either, but it doesn't look too terrible.
Ledger, I can screen share a low time frame sort of mix up that's on my radar at the very least, if there's going to be a bounce that materializes. And also, I do think, like, the last time, or maybe this was a couple of weeks ago, one of the arguments I made is like, the technicals are the technicals, but this seems to be like very news driven, and depending on how these things transpire, there's probably momentum trade there somewhere. I think I shared that this week, where if the grayscale cloud subsides, pretty much I think everything bounces across the board. In my estimation, that's been a disproportionately large driver of this like breakdown, or at least on the daily time frame or the 4 hour, the break of the lows. That's sort of where that's come from. So if that goes away, probably some room to see some green on some time frame somewhere. I mean, how bullish is that, right? But obviously, if it goes to shit, then forget it, basically. But for me, at least, there's previous week's low here, which was understandably an inside week, given the outsized move at about 15.2K. Just going to change the color of that to make it stand out a bit. And then it's really the daily time frame where I think the market's actually been quite technical to its credit. So if you take the lowest close of the entire nuke and then the CPI day rally highest close as well, that's sort of a decent little daily range that the market seems to be caring about in terms of where's support, where's resistance. And actually, if you look on the 4-hour, it looks just as clean as it did on the day, right? Lowest close, highest close, range midpoint that's been acting as resistance. And the support that's currently able, which is roughly in tandem with Don's line, is sort of the bottom of the range that we've carved out thus far. I mean, it's literally the apex of this move being sold down at about 15.9, 16K, whatever. So for my money, at least, if I got my short-term trading hat on, which isn't one I've worn terribly frequently in the last couple of months, at least, but any type of move through previous week's low that doesn't get basically, that doesn't follow through and the market doesn't accept that type of breakout, maybe like a spike and reestablishing support at that range low, I think it's quite reasonable to look for the range midpoint, if not the range high at that point. And, if it doesn't spike previous weeks low, like, look, it already tested the level. If it just goes up from there, like, okay, that's fine. Very unlikely that I can get a chance to get on board that and have an entry trigger there. But if it does spend a bit more time at this weekly and intraday structure, and in a way that lets me define my risk better, but by maybe poking below here and see who's hanging around, anything back above 6K, I think purely on technical terms doesn't change the high time frame picture and that type of stuff. But there are kind of, the market does seem to respond well to these levels, and that's kind of all you need if you're sufficiently low time frame. So 16K support, 16.78 resistance in the form of the range midpoint, and then the larger range high is 17.6 with the previous week's low at 15.8. If you get any type of breakdown that doesn't stick, or one of your classic type of trap patterns, I think there's something there, if you're of sufficiently low time frame persuasions. And obviously the inverse is true, which is if it breaks down on the backside of this, I mean, it's going to Don's levels and we all die. So
it's like this drip, you're on a 4-hour chart. That's a lot of opportunities to buy those lows at 16K. So it's pretty nasty looking to me. This whole thing feels like it's the breakdown. So if we really do push up or squeeze significantly, it's just creating opportunity for people to load up shorts or squeeze out the people who played it incorrectly.
Right. Yeah, I'd fade that, like anything like this, for example,
right.
That
and
type
who
of
wouldn't?
thing.
I feel like everybody who's in the market is happy to be out of the market. They just would rather do it from higher prices.
Right. Just
I don't
reminds me
know,
how mental the summer was, where we had like 20 red weeks in a row and we just lost track of how many red weeklies there'd been, and it kind of gets normalized pretty quickly. But we've seen some gnarly price action this week in terms of this year in terms of one-sided flows. So I mean, my mind is open to anything at this point. I've seen it all, I swear.
Yeah, but honestly, I'm quite happy to be in the market. I don't really I don't know, but this, for me, at least, right, what I've been seeing is basically we have had the worst news that we could have ever had, and it doesn't let up, and prices go down like 1% every time. We had the FTX nuke, and if you go on the low time frames, you can barely see it on the chart. Like there's like a 10% move. And obviously yeah, exactly. But I mean, obviously people are like, holy shit, this is the biggest news, let me show this. And people are like, okay, I don't want to buy. But and obviously new people come in and start selling because they're like, okay, I cannot trust anything in this market. And it's only gone down 10%. And I'm wondering why. And I think at least at these kind of prices, right? Let's say we go to 11, 12K, which I don't necessarily think is super, super likely, but possible. At those kind of prices, the market cap starts getting so low that I think the opportunity is just too great not to buy. So anything between there and right now, I think is pretty interesting. But obviously depends on what more news we get. And I've been saying this same thing at 20K, right? And then I was like, okay, well, this is just too heavy. Let me get out. And that was a good choice. And I'm doing it again now where I'm like at 16K. And I thought I would be saying this much, much lower, right? I saw the FTX news come in. I saw all of these terrible, terrible things happen, basically. And I thought we'd be trading at 14, 11, 10, maybe wick below 9K levels off of those kind of news. Turns out either everyone's super complacent and everyone's just sitting there on their hands waiting for price to go lower to start selling, or everyone that's been wanting to sell has sold. I'm not entirely sure, but I'm not too worried, honestly. I don't know why. Like, this is horrendous price action and low liquidity and everything, but I feel pretty chill. I don't know if that's a good or bad sign.
No, I think it's fine, and your stance is different than most, right? Like, you weren't as exposed to the market higher. So
yeah, like Don, you like sold 58K. You can do no wrong, pretty much.
Yeah.
When it comes to like re-entering, and like from here onwards, you sort of have to judge by a different standard, which sounds like it's a critique, but it's not. It's actually a flex, right? It's like, to your credit, because of your exit, that gives you much wider bandwidth to sort of fuck around and find out, basically, for lack of a better term, than the ordinary participant who might be just like either zeroed or sitting in deep drawdown and have to be a lot more careful with their sort of the bandwidth of, you know, how they deploy and so on and so forth.
Yeah.
I think the main counter arguments that you'd have to consider on the whole sort of relative strength didn't go down that much is pretty much based on two things in my mind. One is time, that it's simply not enough time has passed post breakdown to mark out the case for relative strength and that we shouldn't be lower. It's been like, basically we had breakdown week and then inside week, and you know, 6K breakdown I think moved a bit quicker than this, but not all too much quicker, and a couple of the others, you know, there's some precedent to suggest that you need to let this thing sort of digest and churn a bit before you have some sort of sense of how well it's been absorbed. And the second point would be that macro has still been strong, right? Like, throughout all of this, one of the reasons we actually have that daily green candle that I talked about was because CPI came in cool and equity risk indices rallied, and sort of S&P and NASDAQ blew their respective roofs off. And I think
we should have been at like 25K plus.
Oh, yeah. I mean, that's the bittersweet part, right? Like, it's kept us from going much lower, but in the absence of large scale fraud, we would have been much higher. So I think those two things are worth keeping an eye on. If you're going to build a case for relative strength, it would be further supported by time, and it would also be supported by equities not kind of not having an adverse impact if they do start to pull back. And, you know, dollar strength and all this other stuff, I'm sure we'll talk about. I mean, at the very least, all of that stuff is on my radar.
I talked to Cred a little bit about this week. These strike me as fairly similar, where we finally broke down from 6K. And even though it wasn't the same amount of time, it felt like the same type of capitulation of 20K, you know, like just this important number that we're going to go into. And now it feels to me like it long term, it probably had pricing, but at the same time, this is where your historical activity really was, like where your people who right now I got Bitcoin maxis, for instance, like flexing on the market, acting like they're doing okay. They're down horrendous as well. Anybody who's been stacking sats for 200 weeks is in the red. That's what the green line means, right? So that's 4 years worth of sat stacking, and you're not in profit. And the real next level of stuff that people have done work at throughout 2019, 2018, the last bear market, is that big range, 8 to 12K, whatever. Like, if you're just looking at something like VRPR or whatever it's called, the volume profile. And Don, I think that where you're working is a very reasonable thing to do. I also think that your initial gut of like, the chart says this needs to go to 10K, or like can, you know, stab below 10K, be 12K, just start filling that stuff in down there. In my mind, it looks like we broke down and now we're waiting for either fast or slow capitulation into those ranges. And if we dance back up, then you're kind of enabling people to get out and refuel and whatever, people who are not in the same position of strength as either of you guys are. I've carried a lot of this market's performance. So, you know, I'm not like loving this by any means. I'm just thankful I diversified what I did, basically. And I just think that outcome seems very likely. Not that it has to happen. Like, we could bottom right in the middle of all this crap, never really reach those levels. But I wonder if the big market participants, the people that are really willing to go in and step in front of this market, are they willing to do it without it just being really, really, really obvious that it's an excellent deal? And I wonder if Bitcoin sub 10K, 12K, something like that, and ETH somewhere sub 1K are those types of numbers. Do y'all think I'm wrong in that? Am I just adjusting the narrative as the price goes down, or what?
I think it's honestly it's a little bit like hoping for below 10K is a little bit aggressive to me. It feels
Oh,
like
it's
it
definitely.
anyway.
That's what I'm saying, though. I'm one like somebody that says, "Hey, I got $100 million to deploy. I'm not doing it unless I get an obvious deal." You know what I mean?
But I think like below like this significant below 20K is already quite the deal. But yeah, it all depends on kind of your standpoint. It depends on like because for me like if this and I mean just to kind of give like a little bit of color of what I've been doing, I've been buying basically 16K like 16.3, 16.2 like into this level basically that we have. And I'm willing to see it go down to 10K, right? Because I think it's a good deal now. It's going to be a better deal then. So I'm just willing to hold this. Anything that I'm buying right now, I'm willing to hold. So at the end of the day, it doesn't really like I can buy more at 11 or 10. I think if it goes below 10, I'll just for at least if it goes quick, right? If this bleeds to 10, I'll be terrified that this market is seriously going to zero. Because I think at that point we're starting to get into very, very dangerous territory. I think we're already quite deep into territory where we really shouldn't be trading at. But if we go quickly there, I could see myself like buy more than I normally would, which would make me obviously like overexposed, and then I would sell on the bounce again, like I always do, like up 20-30%, and I'd be happy with it. But yeah, I don't know. For me, it just kind of seems like essentially everything in this range is kind of funny to me that we're even getting. It seems very, very low. And I think it's the only reason why we're getting it is because we're basically getting several black swans on top of each other. So yeah, I think it's possible. I think it's not necessarily too likely, and I don't want to be too aggressive. I've been pretty like I haven't been too aggressive the bull market. I took profits very, very early when like this kind of thing just looked bad. And I could have made much, much more in the bull market. And I don't like, for me, it's kind of nice to get like a position that I've wanted for basically like the bull market when it was going like up here. I was wishing I had like a really, really good position. Only had like a meh one. And I'm happy to kind of put it back on like at cheaper prices, even on the right side here. So yeah, I don't know.
No, I understand. I'm not trying to say that what you're doing is wrong by any means whatsoever.
Like different perspectives as well to a large extent, right? Like you've got someone who like sold 60K and gets right off if he holds it for more than a year for
Right.
like a spot investment, versus maybe Ledger and I have more of our trading hats on at the moment, being like, we've got a break from value and, it was sideways for like several months. Where might that type of break take us? What kind of evidence do we want to see from macro or whatever else, all this type of stuff. There's some divergence definitely as to like time frames and I guess almost mandate when it comes to buying this type of thing, which I think all of which is completely normal and reasonable within a market. Like I think if you care about crypto, I would find it very odd to be telling someone who's like sold whatever 58 and buying 16, like, oh, you're such an idiot. It's so early. Risk assets are going to be dead forever. It's it's like a very strange argument to make. So even on the, as you mentioned, Ledger, on the DCA front, if you were doing that indiscriminately on the way up and sort of on the way sideways on the way down, you're having a very rough time. I think if you want to deploy that strategy sub 20K as your filter, that's, I think, much more compelling than doing so blindly at all times. So yeah, it's important when you're like following any discussion or talking to someone to get an understanding of where they're coming from in terms of how they manage their exposure, and also what they're looking for in terms of their time horizon, tax optimization, their capacity to continue to do business if the market does go lower, their plan if the market goes higher, all that type of stuff. It's very like quote unquote boring, but it is important if you're trying to establish like what premises someone's making an argument based on.
And that's the basics of how I've explained it to people around me is like, you are entering the time of excellent value. Whether or not this price will feel like excellent value in 6 months, I have no idea. But if you spend a year, or more, kind of filling up to your risk tolerance from an investment perspective, then you'll probably be really happy over the coming several years. But if you just put in your full clip right now, well, if you're not the type of person that can stomach another 50% down, then that's the wrong strategy, right? And yeah, I think it's really hard to predict because you mentioned multiple black swans, Don. We don't know, like some of the biggest companies are leaving this earth, like going into full liquidation and bankruptcy mode, and we don't know who's next. Where does the contagion extend? And I don't think we've seen the end of contagion, although we may have seen close to the end of that contagion having a massive impact on the market, especially if we see Genesis, Digital Currency Group go under. There's not a lot of others that are going to have that size of impact now.
Yes. And macro still matters, I think. That's my unfortunate take from all this as well. Like, it's the biggest driver of flows for the entirety of this year. And we sort of stepped away from paying attention to it because crypto has just had its own share of headlines, put kindly. But I still think broader risk premia across the world and, those macro flows, they still do matter for crypto. I think I agree with Don's assessment where that kind of stuff is likely to matter less the lower we go, because the market caps get to like a very risible amount wherein it's easier to like push around and decouple. So kind of the lower price goes, the higher the likelihood of a decoupling. But I still think the broader environment we're in, it caused so much of the move up. Very accommodative fiscal and monetary caused so much of the move down, the speed of the tightening. I'm very reluctant to remove that type of stuff from my framework, at least in the near future, because I still think it matters. And also because I think a lot of the stuff that we talk about, like the dollar and the risk indices, they are at relative inflection points. So if there's ever a time to sort of at least be aware of them, it seems to me to be in the coming, few weeks at least.
Yeah, can we go look at a couple of these? The S&P had a really nice recovery, but I mean, it's got a long way to go if it wants to hit prior highs. But from a like trend line perspective, maybe you can look at moving average stuff. Still looks like it's in sideways land, but it's not at any real risk of imminent new lows, which is pretty impressive. The Nasdaq didn't have near as strong of a recovery. The Russell 2000 similar. But as you kind of move into other things, oil is really breaking down strongly. I don't know if y'all been paying attention to this, but another 5% today, $75. This has really positive impacts on inflation. It's a significant source of inflation. We're also seeing yields finally soften for multiple weeks in a row. The 30, the 10 is a little stronger, and the 2 is even stronger. So it's actually the long end of the curve expectation that maybe more raises in the near term, but the long end starting to soften. Additionally, very interesting. And then the dollar recovering a bit, but after that nuke, these look like just going to backfill sideways types of candles, right? So it doesn't really look like we're pricing in imminent doom and gloom on legacy markets. More sideways chop, no new highs for a while, probably type of stuff. Gold had a nice bid, and now it's falling back down a bit. But yeah, I think that all these markets interest me significantly, just because if you get outside of our own black swans and whatnot, then you see like, what does the rest of the market think? And the rest of the market is, from everything I can tell, trying to say like, hey, we might actually soft landing. Am I reading that incorrectly, do y'all think?
No, I agree. Like honestly, like, I mean, the dollar is still like, that's still one of the things where I'm like, okay, this is gonna be an interesting one. But it actually rejected, like, do you remember like the 3 month that we talked about?
Yeah, I have it. I have like massive Don clout on my chart, so I'll just show it to you.
It's
So
sweet, huh?
It was early in that yellow box because we were talking about the magnet to 120, and you were like, actually, I think this like 114, there was a block back there, is more relevant.
Yeah.
So I put a line on it, and it was legitimately the top of the wick, and it was just right here on these two candles.
Yeah.
So yeah, you dominated that one.
It's basically we rejected there, and we're now back at support, right? So we'd expect, like, if this is really not, I mean, just looking at this chart, just ignoring everything else, you'd expect it to find a bit here and actually come back up again. I'm hoping that obviously that doesn't happen. We just need a little bit of a breathing room, because if this keeps on going nuclear, everything just kind of falls apart. And it's been nice to not see this. But yeah, it's back at support. So I'm not entirely sure where this is gonna go. I'm not super bullish, as in, like, I don't think the dollar is gonna go much crazier. Just given on, like, the chart that you showed, just seemed like a pretty significant breakdown. That if anything is gonna take a while. Like, this could go sideways for 6 months, because I mean, this is like this is a 3-month chart, right? So if 2 or 3 candles to the side here, this wouldn't be too extraordinary. So there's something there, and sideways will probably be enough, I think, for most markets to just kind of stabilize themselves and kind of grasp the new reality, which has been, I mean, if you have this kind of move up, right, no one can really do anything. Everyone's just at the mercy. But if it goes sideways for a little bit and gives people some time to digest this all, and the world kind of normalizes itself again. And I think that'd be quite healthy. And the chart kind of gives it some room. So I could see that be the case. And the S&P, like you said, really, let me see if I have a good chart. Yeah, I do. The S&P doesn't look too terrible either, really, because it's been the first breakdown of a support that we've had the entire way down, right? You can see this, like, it does basically this, right? It goes from support to resistance, and then it breaks down the next test, basically, and it's done this the entire way down. And this is the first time that we've actually reclaimed the support on the monthly, which is good sign, right? And we actually used it on the weekly time frame as support, and that's where this bounce, this current one, is coming from. So that doesn't look too terrible to me. I agree with you that this just kind of looks like it wants to go sideways. I don't necessarily think this just wants to do this. Seems unlikely. I think if anything, wants to kind of go sideways here and then decide.
Do you have the DJI? Because it's even better than this chart.
Yeah, I don't have it, but you can show it on yours.
It's in terms of that kind of prior high level that we were talking about earlier. Oh, this is the only index to actually have gotten there. And I was looking up who is in this index, and this is, I kind of think, a good signifier of what should we expect, this like great repricing. And the companies that make this up, that are showing some relative strength, are the companies that have had freaking exceptional business models for a long time. You know, it's cross sector as well. As Goldman Sachs and Home Depot and McDonald's and Microsoft and Caterpillar and Honeywell and Visa and Chevron and Johnson & Johnson and Boeing and Apple and Walmart and Salesforce and JP Morgan and 3M and Nike and Walt Disney Company and Coca-Cola, United Healthcare,
FTX,
Verizon, Intel, Cisco. These are the companies that make this up, and they are the healthiest companies in the world right now, who didn't have these gigantic multiples and whatnot. And that index is showing it. And to me, it's a sign that this continues to be a strong companies win type of market, and the willingness for people to like go out on the long end of the curve of risk is low. These companies, have some form of dividend. They always make money. They're relatively conservative, and I think that just is having a massive impact on where people choose to put their money.
I mean, makes sense, right? Like, yeah. I think a lot of the nonsensical stuff's just been starting to get washed out in the last few months, where you see companies that never make money and probably never will, just have like stupid evaluations on stupid base. Like,
did you see Bird?
No, I did not.
Bird Scooters. They've raised.
Oh, yes.
They raised something like $2 or $2.5 billion. As in, that's the money they raised. Their market cap is $70 million. So that $2 billion was at a much higher multiple, and their market cap is $70 billion or $70 million, and they're unlikely to survive, it seems. It's like,
High
the
FDV
whole-
tokens.
Yeah.
truly.
And the whole like cash is trash meme that we've had for so long, right? That got really, really loud at the top, basically. Finally, you don't really see it anymore. People do like their cash now, even though we're inflating. It's kind of funny. And I think it's a good thing, right? We've had a lot of people throw a lot of money at complete garbage, and we had retail enter trading at rates that I don't think we've seen before, like Robinhood and all those kind of like GME, AMC stuff went completely ballistic. Everyone was trading, and that just back then even reminded me of 2017 kind of Bitcoin and altcoin mania that we had. And I'm kind of glad that that's washed out for the most part. Obviously, that kind of stuff takes a while. I still remember back in 2018 how long we had to go sideways until people actually started disappearing. I think we are not necessarily through that yet, but I think the whole, okay, this is really cool, this is really trendy to be this trader or to invest stupid amounts in stupid companies, I think that's largely behind us for now anyway. Hopefully.
There are some legacy levels I can, with all this discussion, I'm maybe like 2% more bearish than the sort of tone of the discussion, or at least cautious for to some extent. I mean, this is still a downtrend, right? Like on the monthly, the weekly, etc. We've had our first reclaim of support, but still no higher high or meaningful shift in market structure. You can just look at the line chart to get a perspective of the trend, broadly speaking. And at the moment, there's no kind of higher time frame or more confirmatory evidence of trend reversal on this thing. I agree that ranging would be fine / enough. Downtrend continuation would definitely drag us lower. Well, not definitely, there are no definites, but I think very likely to drag us lower. One thing I'm looking at when it comes to the S&P specifically, there's a really nice inflection point around the 3900s handle. Prior, I think Donna's got on another chart, at least on the weekly, has basically the top of this consolidation boxed out, and it's a really good level. Support, resistance, like that's been a very, very good pivot, and so I think losing that wouldn't be great. I think there's a decent chance if that goes, we retrace a lot of this kind of engulfing weekly breakout type of thing, and it takes us at the very least back to monthly levels. In terms of where it's coming from right now, if you take this range that the market was in, between sort of 36 and 4,200, and look at where the mean comes in, or the midpoint, or whatever you want to call it, it's right around that 3,900 4K handle. And you could even, given we're not sort of tick to tick trading this, box that out as the consolidation between impulsive moves. So you have impulse, consolidation, impulse, and a lot of the time that consolidation between those moves ends up acting as a short-term pivot. And that's sort of where the market's traded into. And, it's reacted to that, certainly, like a weekly like this getting faded to some extent is, worth paying attention to. And I think if 3,900 folds there, there's room for acceleration, and that might start to look somewhat precarious, purely technically speaking. And, you can just eyeball what that level looks like even on the daily time frame. This is the best pivot we have. It broke through it very impulsively, hit the higher time frame resistance, and then just completely slowed to a crawl, right? So I think if we start seeing sub 3,900 weakness, this ends up looking like a very dodgy move that's sort of ripe for retracing. Now, again, the retrace doesn't necessarily mean like trend continuation or new lows, whatever. But it can. That's the risk, right? That it can, because it's in a downtrend, and if you lose a big level of support, you have to at least entertain the idea that the market's going to, make an attempt to make a higher low. But in a trend, just like if you were to make a higher low in an uptrend, you're generally open-minded towards a higher high. If you make a lower high in a downtrend, you have to be sort of open-minded towards a lower low. And again, God knows what sort of macro catalysts it takes to create that type of repricing, but purely on line make boink terms, I think that there's at least a meaningful structure. If you had to have one on your chart, I think daily, weekly, 3,900 area is like pretty good. And the sort of complementary part to that is the dollar, which reacted really well to high time frame resistance, as we sort of discussed in Don's God box. For me, there's a chance of like a decent trend reset on this thing, not necessarily in the same aggressive fashion as we've seen it, but if you look at where it retraced to, it basically came back to the origin of the move, right? Like the origin of the final leg. That's where it came back to, kind of the must-hold support. And at the moment, it's bouncing from there. Now, there's nothing stopping this thing from just chopping between that structure and, some midpoint structure at 109s, and that ends up being your range. But similarly, if you've got like a very strong trend and it gives you the first deep pullback is bought. Like, we do this in Bitcoin all the time, where if you see a 40% decline and the market actually holds that, no one really targets like a lower high or something like that. The expectation is that was the brutal part of the trend reset, and then now that the trend's been reset, you sort of gun towards larger time frame trend continuation. And honestly, even just like pushing up into the 110 handle or whatever it may be, that could be enough pressure to sort of resume a lot of the weakness we've been seeing across risk assets. So to me, the issue is like we're just like at an inflection point with a lot of macro stuff that could result in pressure, and that's basically high time frame dollar trend reset support, and then resistance in risk indices with a chance that sub 3900k it starts to look a bit wonky, and both of those are happening at the same time. So I'm kind of keeping an eye on those still.
A stock that looks like the last big domino to fall?
Tesla, yes.
Don's favorite.
We've been talking about this.
Just take it to zero.
I mean,
ooh, this is, yeah, okay.
Everyone, that Musk margin call is before the split. TradingView should be able to fix that. Everyone that is a technical market participant, no one looks at this and thinks, how bullish. Do they? And obviously, Musk has been selling his stock. He's also highly distracted by fixing the Bird app. And meanwhile, his bread and butter company over here, they're selling more cars than ever, but is their profitability improving? Like, what's the uptick look like in terms of sales potential? Even all that aside, just pure multiples, unless you pull the whole it's a deflationary Cathie Wood argument, or it's a tech company Cathie Wood argument type of thing. The multiples on this are really bad for a car company, and all the other car companies are apparently becoming tech companies because they're all coming out with electric car hub type stuff that are pretty impressive. Is Tesla going to nuke?
I mean, I think so, yes.
It's down 60% already. It doesn't look
Don
like
would be a happier man if it does. I'll say that much.
I mean, honestly, like it might not. No, I just don't. I don't. Just don't like Elon Musk too much. But me saying that is gonna get me killed every time, because for some reason, and this has been like a headache for me for the longest time. People kind of think you can like this has anything to do with politics, which I don't think it does. Like Elon Musk doesn't really, to me anyway, but is what it is. But yeah, I'm just looking at this chart, it's just breakdown, right? It's the first breakdown in a long time. You can start being bullish again when it reclaims. But like you said, I don't really see the multiples. Like if you buy this thing, even if it does well enough, I think you're just kind of like it's already so big, and no one can even. I don't think anyone can deny that it's a little bit on the overvalued side of things in comparison to a lot of other car companies. So I don't know. It just seems kind of like to me, if you're buying this, you're hoping for it to just not move or just to go sideways at best. I don't really see the point.
You're hoping it repeats this.
Ledger's going for some crypto price action correction, but Tesla is the new ETH, 95% down.
I don't think you can deny Tesla changed the car market entirely. Like they forced everyone else to increase their electric car production lines and whatnot. Now that goal has been accomplished. Like they're all producing electrics. The market wants electrics, and will Tesla be able to capitalize on the part where they go from disruptive, research-driven car manufacturing and turn into one of the biggest producers on the market and still continue to innovate? Because if they become Ford, well, their multiple becomes like a PE of 5, right? Like they become a boring company, not a boring company like Elon's other company, but an actual boring company. Like they just become a car producer. Or will they keep innovating to justify these high valuations? But the fact that you're seeing others catch up to what they're doing it leaves room to price this stock down, even though they accomplished the goal, if you will, of transforming the car market. And yeah, I think 90%, 95% off the top is a huge difference. It's the difference between 20 and 40 in terms of a target. I don't think either is off the table. Somebody take over for me. My son just came down.
That's fine. Yeah, I don't know. Like, you also have to consider, I think, broadly the broader market would have to look like. I mean, this is a big part of the S&P as well, as far as I'm aware. Actually, that might be completely wrong. But in any case, what do broader sort of premia look like if Tesla basically plays out the Ledger legacy trade and goes down like 94%, or gap fills a lot of this or whatever? I mean, that's some sort of like apocalypse scenario. So that would be a bit dodgy. I mean, purely technically speaking, it's very hard to disagree, right? Because you had like a multi-month or like a year plus, year and a half range from basically February to the end of this year. That on sort of baby pips 101 terms, you had a big range, and that big range seems to be breaking. It's actually a bit like Bitcoin in that regard, right? Just on a much larger time scale. Yeah, baby pips, right? But you had a big consolidation. That big consolidation seems to be breaking out. There might be some structure here, because I don't know what you think of this, Don. This is sort of your wheelhouse in terms of structure. There is a pre-breakout monthly consolidation, kind of the range that it was in mid 2020, between sort of 130 and 160. And that's at least some structure that's worth paying attention to. Like, especially if you can get like discounted entries towards, the bottom quarter of that or whatever, like closer to the bottom of the structure than the top. There could be something there, even if it is for a short-term trade, kind of from support to resistance type of thing. Wouldn't be the worst thing in the world. So there is some structure here that I think, unless I'm wrong, is worth paying attention to. It's also very visible on the weekly time frame, actually, where it was this entire range before the acceleration sort of picked up. So there could be a short-term pump there, but yeah, bigger picture, a lot of these structures that we're seeing across the market, both in crypto and legacy, that they don't give a ton of room for comfort, because you basically have long consolidations breaking down, and I hate those types of trades, because generally speaking, what I do best in those scenarios is if you have a big consolidation that breaks down, sort of large range, and it breaks down, the best trades for me at least are either on the reclaim of that structure, which has to happen either very soon or much later, or it's when the market actually reaches, as a result of that breakdown, some much lower, higher time frame support, and then you trade that structure per se. I've lost a lot of money in the past, basically as soon as it breaks down, trying to do business like somewhere here, and by the time it actually gets to where I should be trading, I've already had a very rough time of it. So maybe that's my bias speaking. I've sort of applied a similar logic to BTC, right, where you had a multi-month breakdown, and that's kind of unfolding now. And historically, at least, if I've done a ton of work here, at least on my swing strategy, it hasn't served me particularly well. So that's at least my perspective there. Also, before we jump off, I do want to talk about ETH, but if you have any comments first, I'd love to hear them.
Holy
I agree.
Crap! Sorry.
Yeah, I do like that support. If it wasn't Tesla, I'd be like, okay, this is nice. We have like a consolidation. You break it down, and then you run into significant high time frame support where you can kind of squeeze out everyone that's trading the breakdown, which is kind of cool. But it's Tesla, so I'm not going to not going to give any bullish insight.
I mean, that's fair enough. I understand that. Ledger, was that your reaction to the ETH chart or something else?
It was actually the coin chart.
Oh yeah, coin is horrendous.
Oh yeah. I can throw that up real quick.
I just pulled it up, but
yeah, there you go. Oh yeah,
that's
big week.
Fresh lows territory. I heard their bonds are trading at some incredible discount as well.
It's like 15% yield or something. I don't know. It's maybe even higher. Yeah, it's.
I don't know.
I mean, I understand it from as a structural point of view, right? It's like if you think if you just saw one of the biggest exchanges blow up, that probably changes how you price the exchange business more broadly, at least in the short term. And when you're seeing the extent of the contagion, you're going to want a bit more of a premium to be. I think Coinbase is like worlds apart as a publicly listed company, and all that type of stuff. But I can definitely understand why these centralized counterparties, given the magnitude of the implosion, contagion, etc., are being repriced a little bit. Trading the listing day of this was fun though. That was really good.
Yeah,
I've got some fond memories of this thing.
I wonder at what point is there more upside in coin than there is in like crypto, like in Bitcoin or ETH.
I think it's starting to get really interesting because the thing is, like FTX blowing up is not necessarily like as long as nothing happens to Coinbase, right? That's a bullish thing for Coinbase because they're going to get more market share.
I think they're poised to absolutely dominate the U.S. centralized market.
Exactly. So you kind of have this thing where you could actually pick it up for cheap just because a competitor went down. It's hilarious. But you obviously run the risk of it going down as well. I mean, I said I don't think FTX is going to go down, and I was wrong. I'm going to say the same thing here. I'm going to say I don't think Coinbase is going to go down. Hope I'm not jinxing it because that would be fucking
Oh, the
bad.
Don curse. Yeah.
Because I mean, usually I'm right on this stuff, right? But turns out on FTX, completely blindsided. Maybe I'll be blindsided on Coinbase too. In general, one tip for people, right? You don't want to have your money necessarily on an exchange. You want to be trading on an exchange if you have to, but you want to be pulling the money off, obviously, once you've done your trades. I think that's kind of just makes sense if you've been in crypto for a while. But yeah, I don't think Coinbase is gonna go up in flames. So at some point, I do agree. Like Ledger, this is gonna be an interesting one, just based on the fact how hard it's dumping off of it basically gaining potential, because FTX being out of the picture is a good thing for Coinbase.
Brian Armstrong will be your counterparty if you buy now. I think he's been selling shares recently.
Still?
Oh yeah.
No, he sold like 1
but he says to
million.
fund this life research stuff, but
Yeah.
and then
And
it was
it's been-
pre-planned, etc.
It was a very small
Exactly.
amount.
Yeah,
It's small and
exactly.
it's been pre-planned for quite a while. So
Yeah.
Yeah.
No, that's interesting for sure. I mean, I'd rather, if I'm gonna be doing crypto upside play legacy instruments, I think for me personally, and look, the likelihood of this happening is really low because I'm like an idiot. But if I were to do it, it'd probably be via coin. And actually, this is like a seething hot take one. It'd be via Meta as well. If we're talking about like multi-year type of stuff. Because the amount of resources that are being if the metaverse is going to have if the metaverse thesis is going to play out over several years, I have much more faith in Zuck pulling it off than all these NFT projects that like scammed millions and are saying, oh, we're going to build our own metaverse and we're going to do this and we have this token, that token. I think if I want to express a metaverse view, I'd rather do it through Mark than through whatever garbage coins we came up with at the pico top of the cycle, basically. So there are, I think, some legacy plays to express bullish crypto views. Maybe even some public miners after I think there's still some washout likely on the mining side, but there are a lot of public companies in that space, and if you see some survivors there amongst all the bodies, you can start to build a pretty decent crypto-facing legacy portfolio, and that certainly reduces a lot of your counterparty risk. So there's interesting stuff there. Not MicroStrategy though. I'm not,
You wouldn't do it in GBTC?
I don't know. Maybe if we get a bit more. Honestly, I don't know. It's a trade. I'm similar to Don. I've been stalking that trade for a while, thinking, "Oh, this is like a good discount and whatever else." But it just seems to be getting worse. Yeah, it's 45%. I mean, that's getting pretty extreme. But I've also held that view at like 35%. So I've sort of held off on that. But no strong GBTC views.
It's ticking 25 cents either way here on my chart while I'm watching it.
The scary thing, the scary thing with GPTC, right, is that if they basically keep it around and farm you for fees and never redeem, right? So you're just kind of stuck in it. So I mean, that's the risk that you kind of take. And I thought that was going to be unlikely, but if this all goes wrong, basically, it seems like a pretty scary thing to face. So I'm like, for me, basically, the GPTC trade would be a long-term trade, right? Because you don't buy this thing and then just sell it in a week or two, because, I mean, it's just not how it works. And the good thing for me is, and the reason why I've been dodging the GPTC trade is basically because I can buy Bitcoin, hold it for a year, and then don't pay taxes, which makes me have like a bigger discount than the GPTC discount. It's like pretty much equal right now, without the risk of it just never going back to parity. So I'm kind of glad I don't have to take that trade. It's an interesting one though, because like you guys said, the discount is so big. It's just, it's a little bit scary.
Implied price is $8,800.
Yeah. It starts getting interesting, right? But it's like, but it's, are you gonna be stuck in this thing forever and just bleed out the management fees every year? Is the question. And that kind of scares me. And I think that's what's been driving this price down and down and down and down.
But I think
Ledger, what are you doing?
this is where I just take the risk personally. I think just buy it and YOLO.
Yeah, I can see that. If the discount gets so big that you're just like, okay, fuck it, I'm gonna throw some money in. If it goes, it goes, and if it doesn't, well, I'm gonna make a shitload. I think those are kind of levels where that happens. So
you treat GBTC like some shit coin on Trade Ogre, like I'll punt if it plays out, great. If not, whatever.
I guess I don't know.
Yeah.
It seems like this is because the liquidity profile is terrible, right? So it could get, people if people get dragged out, it could get that bad. There's not a lot of liquidity on the token. There's a lot of people that hold it. There's a lot of people in dire straits that hold it because this has been part of the lack of liquidity that people have had that's caused them to go bankrupt. So
yes.
But it was also the source of the yield in the bull market for a lot of these protocols doing like ARBs, on GBTC. So it's kind of, we have like a small collection of entities and instruments which were very important in kind of boosting the bull market and then also in creating the bear market. It's like time is a flat circle in that case. It's very
and this is a
artistic.
trust. The trustees are the only ones that can change the rules. So one of the big interesting questions is, if the trustees change hand, like if there become new trustees, if there's an acquisition of DCG, or like what scenarios make it to where something new can happen with this product that becomes more interesting? Like what if BlackRock ends up the issuer of GBTC and they are motivated to figure out what digital currency group can't in terms of like how to turn this thing into a better product, or what if it becomes like a Vanguard product? These are the types of outs that might exist for Barry right now in terms of how to survive without bankruptcy, assuming this $1 billion hole is the real deal. I have no idea. I'm just saying, like, what range of outcomes might exist and how could those look good for GBTC in the future?
Let's start by plugging the hole, right? Like,
yeah, right.
Can we get this 1 billion clouded, and then we can have a constructive conversation and start to avoid this? But it's definitely something I want some clarity on this week.
I do feel it's like every potential retail avenue has gotten people absolutely wrecked. Like Gary Gensler really has not done a good job in terms of this discount is hurting retail as much as it's hurting those institutions. This kills retail because this is so many people's access to crypto from retirement accounts that are supposed to be safer, and it's trading 50% off on an asset class that's also down horrendously, all in the name of protecting people, and it's charging 2% per year for the privilege of it. It's disgusting.
Yeah, it's horrendous. Like that's just absolutely insane. 2%, and then they don't do anything, right? It's not like they're doing anything.
They custody Bitcoin.
No, they're suing them, Don. They're suing them.
Supposedly they are custodying Bitcoin, even though
I can do your custody for 2% too.
they were tweeting how they're not willing to do proof of reserves. Y'all saw that, right?
Yeah, that was. I didn't love that. I mean, for the sake of security, a lot of the smart on-chain kind of people said that explanation doesn't really hold up to scrutiny. And in my estimation, like when you have such a confidence crisis in the market, you better have like a damn good reason not to show proof of reserves for a product like this, because the sort of risk calculation there is, and perceived confidence. Like unless you really have a good reason not to, you really should, and they didn't. And so you're building this picture now where, there's a 1 billion hole. There isn't a lot of speculation that someone's biting on it. And now when it comes to the actual proof of reserves on the GBTC, we don't have clear evidence of that, even though I like almost like in a Don-esque way. Like I'm scared of being wrong on this, but Coinbase seemed to have confirmed that, that they're executing the custody. And I think it's likely that they're way too responsible to like degen it out, so to speak. But again, the opaqueness of these large entities is definitely cost us a lot, and so it doesn't make me all too comfortable that they weren't willing to provide it. For me, that's really the weekly focus. or something ideally early in the week for this kind of stuff to get resolved. It's just this whole GBTC, are they going to liquidate the trust, and Genesis, this whole situation, some clarity I'd be extremely grateful for. In the absence of that, I'm a bit like, still like contagion brain, basically.
Cred, I'm sorry I distracted you off of your ETH talk earlier.
Oh, no, I just wanted to get your thoughts, because for me, like, if I pull up this chart, like, there's significant structural divergence between like BTC and ETH, because Bitcoin broke down. I mean, first of all, Bitcoin didn't participate in this counter trend rally, right? It kind of got stuck at 25K and didn't really move off those all that much, while ETH went from like 800 to 2000. So while equities were ripping on this leg, ETH was as well because of the merge, whereas Bitcoin wasn't. So that was significant structural divergence, number one. And the structural divergence number two is taking place right now, where Bitcoin decisively broke through its kind of potential higher low structure, its range low, its support, whereas ETH is currently holding some version of it, or at least trying to carve out a higher low. So two quite different markets to be looking at. And, whenever you get this type of relationship, my brain immediately starts thinking, is this like relative strength, or is it just lag? And if it's lag, the price you pay for that lag is much higher, because we know that ETH, cyclically speaking, will like overcorrect relative to BTC, and then you sort of, and then usually outperforms as well. So that's definitely got me thinking. I mean, purely from a trading point of view, if you're going to play the catch-up breakdown short, sub 1.1K, whatever technical entry trigger type of stuff is probably available, but it's not available at the moment, and that sort of got me thinking. And the high time frame charts are honestly quite scary. Like, Bitcoin has very clear structure that isn't terribly far away, as Don said. It's sort of 12, 14K, all that type of pre-bull market shelf is fairly self-evident now that the range low is broken down. If ETH follows path in the same way and the range low actually breaks down, it's less clear to me where that might take place. I mean, a basic eye test says maybe around 700 to 800 is your first structure, but that's going back a fair bit, and you can see that it didn't really do much as the market was rallying. And then if you want to consider like the equivalent of a 10K structure for ETH, you actually end up at some pretty scary prices, sort of in the 400s, I think, and this volume cluster or cluster of price action here. And that's, a far scarier type of market, and God knows what everything else looks like at this point. So I really want to see if the market is actually capable of carving out this higher low here. Maybe it just does nothing, and then Bitcoin hits support and ends up bouncing or something like that. But in my mind, the base case for corrections has been, Bitcoin craps and ETH just kind of outperforms to the downside and then later to the upside. And the structure at the moment, both in terms of how it rallied and in terms of how it's performing on the dump, it's not sort of behaving in line with those expectations. So I think some thinking, observation to be done there at the very least. And I don't know what you guys think about this.
Yeah, for me, it's kind of like ETH's kind of like the narrative is there, right? The deflationary narrative, whatever, but it's just been weak. It's not been like, in general, it's not been as weak as Bitcoin has, but I think that's mostly because it just started from a higher point. Like, the rally was better because of the merge, basically. I still think, like you said, this is significant. It's a higher low. I have it like marked out as such, but I think there's much more interesting coins to be traded, honestly. Like, I agree, if this breaks down, you can short it, whatever. I think this is probably gonna just go sideways, like between 1K to like 1.8 or whatever. I could just see it go sideways. It's my gut feeling anyway. If it does not, like you said, I think I do kind of agree. Like, the supports are much, much lower, like below 700 and then 400, and you don't want to have either of those. So for me, it would just kind of make sense to go sideways. But I really want to talk about Litecoin instead, because that's much cooler.
Go on.
So Litecoin, right? The weirdest fucking chart planet. Everything's in a bear market. Litecoin is not anymore. It's just been like, whenever everything's been collapsing, Litecoin just goes up against Bitcoin anyway. Other coins go down when Bitcoin, like against Bitcoin, when Bitcoin goes down, Litecoin just goes up. And it's been like this for a while, since exactly the bottom. Yeah, I mean, I like this stuff. This is 2017 return, right? I mean, back then, Litecoin started off rallying, and then everything went to the moon. Let's hope this is the same, because if it's not 2017, but it's 2018, 19, 20, 21, or 22, it's whenever Litecoin pumps, everything goes to shit, which has been like basically all of the time. But if it's anything similar to 2017, we're in for a good time. I'm not entirely sure what it's going to be, but I'm just seeing a lot of relative strength, right? And this is, ETH's been showing relative strength against Bitcoin because it's not made a new low. This is something completely else where you've just been like just going along, right? You see this, Bitcoin's just been dumping Litecoin against USD's just been in range, which is really interesting to me. Seems like there's interest there. That's why I've been trading it. Not entirely sure if this is gonna, like, if Bitcoin breaks down, Litecoin is gonna go down as well. But if the off chance that Bitcoin doesn't, I think Litecoin is probably going to outperform, and I think it's probably going to be one of the few coins that does if Bitcoin goes up. So I'm kind of like, I like this. Just look at the low time frame. It's the oddest price action ever. And this is basically whenever Bitcoin wants to go down, Litecoin BTC just goes up to negate the impact, which seems like someone gobbling it up. Not entirely sure.
It's you.
We'll see. Parts of it, but not all of it. No. But we'll
Litecoin
see.
piping has been a good signal, right, Don? Like, it's been a really bullish precursor for the market historically.
Stop it. But yeah, we'll see. I mean, I don't want to shill it too much. I don't want to shill anything at this point in the market, because I mean, any bad news and everything just giga nukes. But this is one of the coins to watch the moment you find the bottom, at least. Like, if you don't want to pull the trigger understandably early, you want to be looking at this whenever you think the bottom's in, I think. So yeah, that's the kind of price action I want to be seeing while everything looks like shit, because you know that once the market turns around, this is going to have legs to the upside. It's just a question of when does the market actually turn around.
I think one of the really hard things to recognize now, because everything's been in lockstep to the downside, is that once we bottom and get to the boring part, there's going to be rotations, and those rotations can include multiples. It doesn't have to just be like 20% type moves. It could be 2, 3, 4x type moves amongst these ridiculous narratives for a trader to be able to take advantage of. So the old coins narrative, the proof of work narrative, the Sam coins that didn't die make a bounce type of narrative. Like, there's all kinds of things that can happen even while in the grand scheme of things nothing's happening, but the trader, the person that's still participating and paying attention, can try to take advantage of and to seek upside. And I think this is just an example of where that might be already beginning a bit. There were tons of rotations. A lot of people made a lot of Bitcoin in late 2013 and 2014 in a so-called like altcoin season that was only on a relative basis because people couldn't look at the dollar value. And so now, like, if you're just too down to care or to consider the dollar value, but if you're trying to stack Bitcoin or stack ETH or whatever you're denominating in, there might still be trade opportunities out there as these things in a lower liquidity environment do crazy stuff. And, the disciplined trader who doesn't like put their hat on a peg and call it a day might have some opportunities. We've been talking a really long time.
Good point.
I was just looking at Solana. Did y'all know it's $12?
Yeah.
Absolutely insane. Yeah, but then again, I mean, FTX went down, so
the $3. I have a really hard time feeling like it doesn't get into the threes because of the Sam tweet. Just narrative alone, I feel like it might last 2 seconds there, but I feel like it's really going to want to do that kind of like boing off of $3, because crypto Twitter and their ultimate crowd mentality is going to want to play that.
Oh yeah, I would definitely buy $3.
Yeah, that's a good thesis.
It's
yeah,
funny. I like it.
All right, well, cool. You guys want to leave us with anything?
I think we're good. We talked for a long time.
Yeah,
Yeah,
my
and
kids
Marcus
are all
really
alone.
isn't giving
Like
that
my
much.
Yeah, my kids are alone upstairs doing God knows what. One of them came down here during the show, so I'm gonna go check on them. I hope everybody has a wonderful Thanksgiving. If you're in the U.S. and celebrating this glorious fake holiday, it's a wonderful one. We'll see you next week on Weekly Open, I think. Check us out. Like, subscribe, all that stuff. We appreciate you being here. Don and Cred, appreciate you both. We'll catch you next time. Thanks for watching. Bye-bye.